The Portland Business Journal Thought Leadership Podcast, sponsored by Moss Adams, featuring top professionals and providing insight to keep you and your business informed. In this episode, we focus on year-end giving with Wendy Campos, a CPA and partner at Moss Adams. Wendy, thanks for joining us. What options would you give an individual who would like to give a large sum of money before year-end, but maybe they're not sure what organizations to give to?
Usually, we talk about private foundations and donor-advised funds. It usually comes down to those two giving vehicles. We usually ask our clients, what are your goals? And then we go from there to determine which of those two might be the better option. Donor-advised funds and private foundations both give you a way to give a large sum, take a tax deduction before the end of the year, but give you more time to actually determine either causes or actual charitable organizations to give to in the future.
Okay, and I know it's going to really depend on the individual, what their needs are, the overall tax plan, financial plan, but maybe give us a quick breakdown on the difference between private foundation versus a donor-advised fund.
Yes, a private foundation, that's actually going to be a separate legal entity that would get set up. So it's going to be a tax-exempt charitable organization, but it's going to have an annual filing requirement. There's actually a process to obtain tax exemption. It would have its own board of directors, which if it's a family foundation, generally the family members like some involvement in that. And that's usually one of the questions we like to ask as we're talking about these two vehicles is, what's your goals around philanthropy for the family? What about the future? Because a private foundation also would be a little more challenging to dissolve in the future. If, for example, you decide that your children don't want to be involved or you don't have any children and you pass away. A donor-advised fund has some ease from that perspective, from an administrative perspective, fairly quick and easy to set up. You can usually do that with a Charles Schwab, a community foundation, any type of sponsoring organization. But you get a little less control over where the funds go. And what I mean by that is you get some advisory privileges with a donor-advised fund, but ultimately those assets become the assets of that organization. And while they usually will take your advice, they do have the ultimate control over the funds. Private foundation does as well, but if you have your board and you have family members on the board, you get some say in the causes and the organizations that you give to.
Okay, Wendy Campos, a CPA and partner at Moss Adams, joining us to talk about year-end giving. What other options do people have other than maybe giving straight cash?
That's a great question, and we're getting a lot of questions like that right now, actually, and I would anticipate we will get many more before the end of the year. If an entity or taxpayer is going to have some sort of a liquidity event, maybe the entity is going to dissolve and that those shareholders of the company for some reason might come into a lot of cash quickly. That's typically where we'll start planning with our clients, strategizing. Does it make sense to just give cash? Are there better options? Oftentimes you can give different types of non-cash assets, such as stock, your simplest publicly traded stock. You could give partnership interests even. A lot of people don't quite realize that, but there are opportunities there even for business interests. There are rules around that, both with private foundations and with donor-advised funds. But you could even give those types of assets to public charities, the Red Cross, the Oregon Public Broadcasting. So there's a lot of different ways to give that aren't just cash. And sometimes those have some benefits from an individual income tax perspective that make it even more beneficial than just the charitable deduction or giving to a charity and having that philanthropic intent.
Okay, now if someone wants to start their own private foundation, you touched on this a little bit, but I want to take a deeper dive. Talk about, starting your own private foundation as a charitable giving vehicle. What are the pros and cons for doing that?
The pros, I've mentioned a few of them. The biggest, you get some family involvement if it's a family foundation, and that's usually what we see, where you could have family members on the board. Your board is usually your vehicle to determine who's going to receive grants from your organization. So you would ultimately be making those decisions on who's going to receive grants, what type of causes. Do you want to give to youth organizations? Do you want to give to different health causes, all different types of causes you could give to, but you have a lot of flexibility to determine that when you determine what your mission's going to be. And you usually are the same individuals that are on a committee that might determine who's going to receive those grants versus a donor advised fund where, again, you could have some of those advisory privileges, but ultimately the ultimate decision still could lie with that sponsoring organization because those have actually become their assets at that point. And I would say from a downside perspective of a private foundation, there are a lot of restrictions on transactions that a private foundation can do with its founders and its board members. And you don't have to worry about that as much with a public charity. And with donor advised funds, they're just not really set up to do transactions with them typically anyway. But then even in that vehicle, you do still have to be careful. So with both vehicles, there are some restrictions on transactions you can do with them. But it usually comes into play more with private foundations because the board and the founders are much more involved because it is a separate legal entity.
Okay, let's talk about corporations now. If you want to encourage charitable giving by their employees, what are some of the things they can do now?
A private foundation is an option. We definitely have a lot of clients that have come to us and have said, we want to be more involved in charitable giving. We want our employees to be more involved, or our employees want us to be more involved. What can we do? Private foundation is another option, just like it is for a family. Same thing, same restrictions, but same flexibility. We've had, for example, a lot of different corporations set up a private foundation. It usually starts with scholarships for some reason. They'll want to set up a foundation or a fund where they can help their employees or their employees' dependents go to college or go to a trade school of some sort. So they want to help with that. So it usually starts as a scholarship program, but we often see those evolve. So what I usually encourage clients to do is, well, maybe right now you just think you want a scholarship program, but think bigger, think broader. The more broad you can keep your mission, then the more flexibility you're going to have with that foundation. And what I mean by that is if you have such a narrow mission that, we want to be a 501c3 private foundation to give scholarships to our employees and their dependents for secondary education, you have really limited yourself in that mission statement. But if it's much more broad, maybe you're going to expand beyond employees to your community, that type of thing. You're expanding both what you will give for and who you will give to. So you're expanding that base of potential grantees as well. And so we've had situations when Hurricane Katrina hit years ago, we had a corporation that had set up a private foundation years before, and they had done that. They had just set it up for grants and scholarships, specifically to higher education for their employees. And they came back to us and they said, we want to help. They happen to have multiple stores and sites. They were a manufacturing corporation. We want to be able to help our stores that were affected, but also our employees of those stores that were affected by the hurricanes. What can we do? And at that point, you can change your mission, but there's a process to go to the IRS and ask for that. So it's a little more cumbersome rather than just upfront being very flexible with what you think you might want to do with the organization in the future. If a corporation doesn't want to start a private foundation, there are opportunities, especially if you just want to do scholarships, there are opportunities to not have to set up a separate vehicle and just have a scholarship fund. You do have to be very careful about how you write your plan, how you administer that, how you determine who's eligible, and you stick to very strict criteria. Because when you're dealing with a situation where you're not setting up a separate entity and these are your employees, you always want to make sure it's not deemed compensation, because then it becomes a taxable situation for your employees that you might not have intended. And then the other option for a corporation is they can also do a donor advised fund. You don't see that near as often, but there are corporate donor advised fund options, which are very similar and really the same structure as an individual setting up a donor advised fund.
Wendy Campos providing perspective on year-end giving. You're listening to the Portland Business Journal Thought Leadership Podcast, sponsored by Moss Adams. For more downloads, visit our podcast hub.